Hey everyone, and welcome. Today, we're diving into one of the most powerful and, yeah, let's be honest, one of the most intimidating looking tools in a trader's arsenal, the Ichimoku Cloud. But trust me, by the time we're done here, it's going to seem a whole lot less complicated and way more powerful.
So let me ask you something. Is it really possible for just one chart to tell you everything? I mean, the current trend, the momentum from the past, and even potential support and resistance zones in the future? Well, that is the bold promise of the Ichimoku system. And today, we're going to see if it actually delivers.
And you know, the secret is right there in its full name, Ichimoku Kinko Hyo. Roughly translated, that means one-glance equilibrium chart. The whole point, the entire philosophy, is built around this one idea, that you should be able to get a complete feel for the market's balance, instantly, in a single glance. No noise, just pure clarity. All right, section 1, one glance, total clarity. Let's start with where this whole thing came from and why it was even created in the first place. Now, this system didn't just pop up overnight, not even close. The guy who created it, a Japanese journalist named Goichi Hosoda, he and his team spent more than 30 years researching, testing, and refining it. They didn't even publish it until 1969. That incredible amount of work is why it's become such a trusted tool for serious traders all around the globe. Okay, let's get into the good stuff. Section 2, decoding the 5 lines. This is where we're going to pull back the curtain and look at the 5 key pieces that make this whole system tick. Okay, so here they are. And look, don't get hung up on the Japanese names just yet. We'll walk through it. You've got the Tenkan-sen and Kijun-sen, 2 Senkou spans that actually form that famous cloud, and then the Chikou Span. Let's break down what each one actually does. All right, first up, we've got the Tenkan-sen, or the conversion line. The easiest way to think about this, it's the fast car on the highway. It's calculated over just the last 9 periods, so it reacts really quickly to price changes, showing you that immediate short-term momentum. And if the Tenkan-sen is the fast car, then the Kijun-sen, or the baseline, is our slow, steady car in the other lane. It uses the same calculation, but over a longer, 26-period time frame. That means it moves a lot slower, giving you a much more stable, reliable look at the medium-term trend. Next up is a really interesting one, the Chikou Span, or the lagging span. This one's a little weird, but it's super useful. It's just today's closing price, but it's plotted 26 periods back in the past. Think of it like your car's rear-view mirror. It helps you confirm the trend by showing you where today's price is compared to where the market was almost a month ago. And that brings us to the main event, the star of the show, the Kumo. You know it as the cloud. This is that big shaded area on the chart, and it's what makes Ichimoku, well, Ichimoku. What's really wild is that it's actually plotted 26 periods ahead of the current price. It's literally giving you a glimpse into the future, mapping out potential areas of support and resistance before the price even gets there. And it's not just a blob on the screen, right? The shape of that cloud tells a whole story. I like to think of it as the market's weather forecast. A thick, dense cloud suggests strong support or resistance, a really established trend. But a thin, wispy cloud? That's a much weaker area, a spot where the price might just break right through. Okay, so we know all the pieces now. Section 3 is all about putting them together, reading the market signals. How do we turn all this into actual, usable information? This is the number 1 most fundamental signal you can get from the Ichimoku. It's super simple. Where is the price compared to the cloud? If the price is trading above the cloud, we're in a clear uptrend. If it's below the cloud, we're in a downtrend. And if the price gets trapped inside the cloud, that's the market telling you it's undecided. It's consolidating. So what does a really solid, high probability buy signal look like? It's not just one thing. It's what we call a confluence, a bunch of things lining up perfectly. First, the price has to be above the cloud. Then you want to see that fast line cross above the slow line. And for final confirmation, you want that rearview mirror, the Chikou Span, to also be above the price. When all those things happen, you've got a strong signal.
And for a bearish setup, you guessed it, it's the exact mirror image of the bullish one. Price is below the cloud, the fast line crosses below the slow line, and the Chikou Span confirms it all. And honestly, this symmetry is one of the most brilliant parts of the system. Once you learn one side, you automatically know the other. It just clicks.
All right, section 4, the Ichimoku trading playbook.
Let's talk about where this system really shines and how you can actually use it. Why does this matter?
So when should you pull this tool out of your toolbox? Well, it's an absolute beast for swing trading stocks on daily and weekly charts. The signals are just clearer with less noise. It's also fantastic for options traders who need a strong directional bias and for long-term investors looking to ride major trends. Where is it not so great? For really fast intraday scalping, the signals can get pretty choppy on those lower time frames.
Okay, but how well does it actually work? What about reliability? The source material suggests that in the right market conditions, and that's the key, we're talking about a reliability of around 60 to 70%. Now that's a pretty solid edge, but, and this is a huge but, it comes with a major catch. And here's that catch. The whole system is built for one thing: trending markets. When prices are moving up or down with real momentum, it's fantastic. But when the market is just chopping around sideways, going nowhere, its effectiveness just plummets. You'll get a ton of false signals, and it can be really frustrating. Which brings me to what is without a doubt the single most important rule of trading with Ichimoku. If you remember one thing from this whole explainer, make it this: stay out of the cloud. When the price is floating around inside the Kumo, it means the market is in a state of balance, of uncertainty. There's no clear winner between buyers and sellers, and that is a dangerous place to be. Okay, let's wrap this up. Section 5, the final verdict. What have we learned? So let's boil it all down. What are the key things you absolutely need to remember? 1. Ichimoku is a complete all-in-one system. 2. It shows you trend, momentum, and future support and resistance. 3. It works best in trending markets and on higher timeframes. And 4. The golden rule: avoid trading when the price is inside the cloud. Period. You know, there's a quote from one of the sources that just nails it. Not just another indicator, it is a complete trading system. And that's really the heart of it. This isn't just another wavy line you throw in your chart. It's a whole new framework for seeing what the market is doing. So I'll just leave you with this question to think about. The whole goal of this system was to give you total clarity in a single glance. So now that you can see that whole picture, now that you know what all those lines in that cloud actually mean, how is that going to change the way you look at a chart from now on?